In this episode, we are stepping into a part of modern auditing that can seem highly technical at first, but is actually built on a very practical idea: using data to see more clearly, ask better questions, and make stronger audit decisions. Data analytics helps auditors move beyond isolated checks and limited observations so they can examine patterns, trends, exceptions, and relationships that might otherwise stay hidden inside large amounts of routine activity. For someone preparing for the ISACA Certified Information Systems Auditor (CISA) certification, this topic matters because audit work is no longer defined only by interviews, paper review, and small samples taken from a much larger population. For a beginner, the key point is that analytics does not replace judgment, skepticism, or audit planning. Instead, it gives the auditor a wider and more detailed view of the environment so that the audit process becomes more focused, more evidence-based, and better aligned to where real risk is likely to exist. Before we continue, a quick note. This audio course is a companion to our course companion books. The first book is about the exam and provides detailed information on how to pass it best. The second book is a Kindle-only ebook that contains 1,000 flashcards that can be used on your mobile device or Kindle. Check them both out at cyberauthor.me in the Bare Metal Study Guide series. A good place to begin is with a simple definition of what data analytics means in an audit setting. In this context, data analytics is the use of data examination methods to identify patterns, compare expected behavior to actual behavior, test populations for exceptions, and support conclusions with evidence drawn from larger sets of information than a person could review manually. That sounds formal, but the basic idea is straightforward. If an organization processes thousands of transactions, changes, access events, or system activities, an auditor can use analytics to examine those records in a more structured and scalable way than traditional manual review would allow. This matters because audit quality improves when the auditor can observe how a process behaves across time and across many records, rather than relying only on a small number of examples that may or may not reflect what is really happening in the broader environment. One of the biggest reasons data analytics enhances audit processes is that modern organizations generate far more information than traditional audit methods were designed to handle alone. Business systems, cloud platforms, identity tools, financial applications, workflow engines, and operational technologies all create records about what people did, when they did it, and how the system responded. Without analytics, much of that information remains unused because there is simply too much of it for a human reviewer to sort through one record at a time. Analytics helps convert that mass of raw activity into something more useful by highlighting trends, grouping related events, identifying unusual behavior, and revealing where deeper review may be needed. For beginners, this is one of the most important mindset shifts to understand. Audit is no longer only about looking harder at a few items. It is increasingly about looking smarter across many items so the auditor can focus limited time where the evidence suggests the highest value. That does not mean analytics replaces traditional auditing, because it works best when combined with the core strengths of the audit profession. Auditors still need to understand objectives, risks, controls, process design, governance expectations, and the business context behind the data being reviewed. A report may show a strange pattern, but the meaning of that pattern depends on whether the auditor understands how the process is supposed to work and what business reason might explain the result. In that sense, analytics is an enhancement to audit thinking, not a substitute for it. The auditor still defines the questions, decides what evidence matters, evaluates control intent, and applies professional skepticism when results seem too clean, too messy, or unexpectedly incomplete. A CISA candidate should remember that technology can help examine evidence at greater scale, but the final value still comes from disciplined human judgment about what the data actually says and what it means for control effectiveness and risk. A useful way to see the role of analytics is to follow it through the audit process from beginning to end. During planning, analytics can help the auditor understand the size of a population, identify concentrations of activity, spot unusual spikes, and determine where risk may deserve closer attention. During fieldwork, analytics can help test controls, compare transactions, identify exceptions, and validate whether actual behavior matches management's stated process. During evaluation, Analytics can help the auditor determine whether observed issues appear isolated or widespread, and whether the control environment seems stable or inconsistent across time. During reporting, analytics can strengthen findings by showing that conclusions are based on broad evidence rather than on a few disconnected examples. Seen this way, analytics is not a separate stage that sits outside the audit. It is a support capability that can improve planning, testing, interpretation, and communication all the way through the engagement. Another important concept for beginners is the difference between a sample and a population, because this is where analytics often changes the shape of audit work. Traditional sampling is still useful and often necessary, especially when the auditor needs to perform detailed review or confirm the quality of specific supporting documentation. However, analytics allows the auditor to test entire populations in ways that were once difficult or impractical, such as checking whether every user account followed a rule, whether all approved transactions match policy criteria, or whether any changes occurred outside authorized windows. That broader coverage can reduce the risk of missing important exceptions that happen to fall outside a small sample. It also helps the auditor decide where manual review should be concentrated. Instead of choosing records somewhat blindly, the auditor can use analytics to identify the transactions, accounts, dates, or systems that appear most unusual, then apply deeper testing where it is most likely to reveal meaningful findings. Of course, analytics is only as reliable as the data behind it, which is why data quality is one of the most important issues in this entire topic. If source records are incomplete, inconsistent, duplicated, poorly structured, or pulled from the wrong system, then even a polished analysis can lead to weak or misleading conclusions. Auditors therefore need to think carefully about where the data came from, whether it covers the correct time period, whether key fields are present, whether records were changed during extraction, and whether the data makes sense when compared with the process being audited. This is especially important because bad data can create false exceptions or hide real ones, which means the auditor may spend time investigating the wrong issue while the real control weakness remains unaddressed. For a beginner, the lesson is simple but powerful. Before trusting the output of analytics, the auditor has to trust the input, and that means verifying data relevance, completeness, and reliability before drawing strong conclusions. Once reliable data is available, one of the first ways analytics enhances an audit is by improving visibility into normal behavior. The auditor can examine volumes over time, frequency of transactions, user activity patterns, approval timing, access changes, or the distribution of activity across locations and departments. This descriptive use of analytics may sound basic, but it is often where the most important insights begin because it helps the auditor build a picture of what normal operations look like before trying to identify what is abnormal. A process that seems stable in policy documents may turn out to vary significantly by business unit, time of month, or administrator. A control that is described as routine may actually be used only occasionally, or used heavily by a small group in ways management did not realize. These kinds of patterns matter because audit quality depends on understanding not just whether a control exists, but how it behaves in practice across the environment rather than in a carefully selected example. From there, analytics becomes especially useful in identifying anomalies, outliers, and exceptions that deserve closer examination. An anomaly is not automatically evidence of wrongdoing or failure, but it is a signal that something does not fit the expected pattern and may need explanation. For example, analytics might reveal after-hours approvals, duplicate payments, unusually high access activity by a low-level account, changes moved into production without a matching approval, or a concentration of privileged activity around one administrator. Each of those results could have a valid explanation, but they could also point to weak control design, poor enforcement, human error, or deliberate misuse. This is where analytics enhances audit processes so effectively, because it helps the auditor focus attention on the small subset of activity that looks unusual instead of reviewing every item with equal effort. In other words, analytics sharpens the audit lens by distinguishing ordinary background activity from records that may reveal risk, control breakdown, or the need for further investigation. A closely related benefit is that analytics helps auditors test relationships between different data sets instead of viewing each source in isolation. One set of records may show who approved a transaction, another may show who created it, and another may show whether the same person also had system access to alter the underlying data. One system may show terminated employees, while another shows active credentials, and another shows successful logins after the employment end date. When these data sources are compared, the auditor can identify gaps between what should align and what actually aligns. This matters because many important control weaknesses appear not inside one data table, but in the mismatch between systems, roles, approvals, and events that should connect cleanly if the process is operating correctly. For beginners, this is an important insight because audit often becomes much more powerful when the question shifts from what does this one record show to how do these records compare, and what does the mismatch tell us about control reliability. Data analytics is also valuable because it supports a more continuous and proactive view of auditing rather than limiting insight to one point in time. Traditional audits often examine a past period and produce findings after the fact, which is still useful, but analytics can help the organization monitor patterns more regularly and recognize emerging issues sooner. If the same type of exception keeps appearing month after month, or if a control begins weakening gradually rather than failing all at once, analytics can help reveal that movement before the problem becomes more serious. This does not turn every audit into real-time surveillance, but it does support a more risk-aware approach to timing and coverage. For a CISA student, the main idea is that analytics can help auditing become more dynamic because the auditor is no longer limited to static snapshots of activity. Instead, audit evidence can increasingly reflect behavior across longer periods, recurring cycles, and changing conditions inside the business environment. Another important teaching point is that data analytics can improve communication during the audit, not just analysis behind the scenes. When findings are supported by clear evidence showing trends, exception rates, concentrations of activity, or recurring control breakdowns, management often understands the issue more quickly and more clearly. A well-supported analytic result can show that a control weakness is not a rare one-off problem, but a repeated pattern affecting many transactions, users, or time periods. That kind of evidence makes audit reporting stronger because it connects the finding to actual operating behavior instead of abstract concern. It also helps reduce unnecessary argument over whether the issue is real or meaningful. For beginners, this matters because the purpose of an audit is not merely to discover problems. It is to communicate risk and control performance in a way that supports action, and analytics often makes that communication more precise, more persuasive, and more closely tied to observable facts. At the same time, analytics has limitations, and understanding those limits is part of using it well. Data may be missing key context, such as why a specific exception was approved, whether emergency access was justified, or whether a process was changed temporarily for legitimate operational reasons. Analytics can show patterns and highlight unusual items, but it cannot always explain intent, management judgment, or the full business reason behind every deviation. It can also create false confidence if the auditor assumes that a clean-looking output means the process is working perfectly, when in reality the analysis may have excluded important data, misunderstood a field, or failed to consider a relevant scenario. That is why analytics should be paired with inquiry, observation, walkthroughs, and control understanding rather than used as a standalone answer machine. For a beginner, the lesson is that analytics is powerful because it expands visibility, but the auditor still has to interpret the results carefully and remain alert to what the data may not reveal on its own. Ethics and governance also matter when using analytics in audit work because data access and interpretation carry responsibilities. Audit teams may work with sensitive employee records, financial information, customer details, system logs, or access histories that reveal far more than the narrow question being investigated. The auditor therefore has to respect confidentiality, limit use to legitimate audit purposes, and avoid collecting or examining more information than is reasonably needed. Good governance also means being transparent about methods, documenting data sources, explaining logic clearly, and making sure the analysis can be understood and repeated if challenged later. These practices matter because the strength of analytics is closely tied to trust. If management believes the data was mishandled, the method was unclear, or the conclusions were overstated, then even technically sound work may lose credibility. A CISA candidate should see this as an assurance issue as much as a technical one, because the discipline around analytics is part of what makes the audit process reliable and fair. By the time you step back and look at the whole picture, utilizing data analytics to enhance audit processes becomes much easier to understand as a smarter way of seeing risk, control performance, and operational reality across a much larger body of evidence. Analytics helps auditors plan better, test more effectively, detect exceptions, compare related data, observe trends across time, and communicate findings with greater clarity and support. It does not replace professional judgment, process knowledge, or skepticism, but it makes those strengths more effective by giving the auditor broader visibility into how the organization actually operates. For someone preparing for CISA, the most important takeaway is that data analytics is not about making audit less human. It is about helping auditors ask sharper questions, focus attention where it matters most, and produce conclusions that are more grounded in evidence than limited review alone could provide. When used thoughtfully, it turns large volumes of ordinary business activity into insight that strengthens assurance, supports management action, and makes the audit process more relevant to the complexity of modern organizations.
Thanks for listening. For more audio courses, daily newsletters, and more, please visit baremetalcyber.com.